Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So the bulls ended the week on a strong note. We saw the lack of any bearish reaction to the Netflix earnings. Netflix obviously pulled back a little bit after hours in response to its earnings. We did not see any of the major names pull back significantly, and the bulls saw continuation on Friday with a gap up open and a pretty strong day and a strong close. So the bulls remain in absolute full control at this point. This is the most significant shift in sentiment that I've ever seen in the market, just a complete 180-degree turnaround. There was a very significant shift in sentiment. If I had to compare it recently, it would be February 2016. Market was very weak. We had oil hit a double bottom, or actually we had SPY hit a double bottom to the penny. Oil had an OPEC tweet. We rallied. That was a complete sentiment turnaround as well, but not this significant. And I was not actively trading in 2008 just yet. Shortly after that. So again, for me, this is the most significant turnaround, but we're seeing the exact same thing. Just like the bears were extremely confident that, recession and we're now in a bear market and we're going to dump down to XYZ level. We're seeing the exact same thing with the bulls saying, oh, we're back in full control. All you got to do is just buy calls and you make money. So it's a pendulum swing in both directions. We know we're going to consolidate and need to establish a weekly higher low, but there's just no sign of that yet at this point. Right now, oil, which I'm going to talk about in my commodities video, which I'm going to do after this, is still very bullish as well. We've seen no weakness in the bounce on oil, and we just confirmed the daily bull flag for continuation. Oil's about to test a key weekly resistance of 54.54. That's going to be on watch as well, but until we see weakness in oil and these markets, we're not going to consolidate on the weekly time frame. Last time in one of these videos that I started talking about hedging bullish positions was back here in the 280s in early December. And my reason for talking about it is my parents currently have retirement portfolios that they do not actively manage. I personally don't trust that their financial advisors are going to be giving them the best advice. The fact that, stop losses aren't used and things like that blows my mind. But I'm going to be looking to hedge positions for their portfolio. So using my account to enter some bearish positions in SPY, and I'm going to start building those positions this coming week. This bounce is significant enough on the weekly time frame that I am comfortable doing so. Again, the goal of that trade is not necessarily to hit it big and make money. The goal of that trade is to protect bullish positions. I know that as we get further on this bounce, the risk to reward begins to favor the bears. It's going to favor risk for the bulls and reward for the bears. The more we bounce, the more we're going to likely pull back and consolidate when that top of this bounce is hit. So that's my game plan. I'm going to start scaling into a short SPY position. I'm going to use SPY rather than a leveraged ETF because I don't need any kind of crazy risk or reward. And I'm going to be looking to build 3 total positions. Let's just say I enter my first at 267 on Monday. Then I would make another at 270 and then another at 273. That's just a rough example off the top of my head, but that's how I would scale into those bearish positions. And then again, look to just protect long positions because things are getting a bit extended in my opinion at this point. So while I haven't been very comfortable bullish the past few days, I have been patiently waiting and not entering too many bearish positions. I just started to establish a CMG bearish position a couple days ago. And again, like I said, I'm going to start establishing a SPY bearish position, but that's specific to me and my strategy, with my parents' portfolio, trying to protect that. It has nothing to do with, me thinking we're about to pull back 10% and I want to hit it big on that trade. So that's just a little bit of insight in terms of what I'm going to be doing at these levels and what risk to reward is beginning to favor as we have seen such a significant bounce. We know we got to pull back, but no sign of it just yet as we've had bullish reactions to both tech and financial sectors and their earnings reports. Obviously, we have a lot more tech earnings to go in the coming weeks. So no trading on Monday. We got the holiday, but we're going to be watching the hourly uptrend. Our RSI levels for SPY at this point, putting extended hours on, the hourly RSI on Friday was the highest that it's gotten on this entire bounce at this point. So that was notable. And the 4-hour RSI at this point, we are up at 77. So again, scrolling back, when's the 4-hour RSI been this high? And I can look at this entire pullback since the all-time highs and say, even when we were in that bull run heading into all-time highs, this 4-hour RSI does not stay over 70 long. And here we are up in the upper 70s. So again, that's just another reason why I personally am going to be comfortable scaling into this strength and building a bearish position without having to worry about options time decay, which I would have to worry about if I were choosing to play puts. So that's my plan. And I'm not suggesting anybody do it. I'm certainly not a financial advisor. It's just a way that I'm protecting a long-term portfolio. And I might be doing this trade a little bit different if I were not protecting a long-term portfolio. I might be more patient and just wait for the trend to change on the 4-hour time frame. And if we look back and say, okay, when's the last time the 4-hour uptrend was lost? And we can say it has not really been lost since we did that little brief daily consolidation. So losing the 4-hour uptrend will be an indication that daily consolidation is coming. IWM on the daily chart, keeping control. Let's actually look for some targets on SPY here. So 259.10 is the last 4-hour higher low on SPY. That was a long time ago. Next key resistance is 269. And after 269, we're going to be looking up at 271.22. So a couple resistance levels are approaching. We did get over that weekly exponential resistance. So the weekly 12-period exponential resistance, which has rejected the past few attempts, did become support this current week. But again, that doesn't matter to me because of how extended we are. It is certainly notable. It's not the same kind of rejection that we've seen in the past, but I am going to be looking for a pullback to that higher low to form before we can get clearly over both exponential moving averages and turn those levels into support. So a couple of resistance levels to be watching, and the 4-hour uptrend important as well. IWM, bulls in full control. Daily 142.09, anything above that keeps the higher lows intact. Hourly support on IWM at the end of Friday was 146.91. And the 4-hour time frame here, when's the last time we lost the uptrend? We pretty much haven't lost the uptrend at any point on this entire bounce. So obviously that's going to be clear as an initial signal when we do see that lost. If you put on extended hours, you can see we pretty much traded sideways there and then just continued higher lows and higher highs. So overall, a very strong trend, and we'll watch for the change of that trend, but not going to happen anytime soon because these names are so strong. The next consolidation that we're going to see in these names is going to just look to form those 4-hour higher lows. QQQ, daily time frame, higher low is 161.57. Bulls strong. Resistance is up at 167.60, which we haven't gotten to yet. And that's the same resistance that lines up on SPY at 269. So both QQQ and SPY heading to those key resistance levels. We zoom out to the weekly time frame and still looking for that lower high to form, as the last lower high was 173.31. And at this point, we would have to see another 4% plus in order to get to that resistance from where we currently stand. So again, no sign of any weakness. We have to be very clear about that. Well, regardless of what I think, I think we're going to consolidate on the weekly time frame, but until I see those signs, that's just an opinion and a bias that I have, and that doesn't mean that, I'm going to be making significant trading decisions and risking capital on what I think is going to happen. I want to see signs to back it up and clues that we are indeed starting to pull back, because as we know, if there's one thing that sentiment recently has showed us is that we can go to extremes. We can go to extreme fear and we can go to extreme euphoria just like that, and we can see RSI levels get extreme in both directions and price action get extreme in both directions as well. So we're just going through the second cycle. We had the first cycle of fear. Now is the cycle of everything's fine and euphoria. And now we're going to pull back a little bit in the near term. That's going to be a shift back and say, oh, well, maybe everything's not perfect. And whether or not, what kind of fundamental narrative is going to dictate that pullback, I don't know. It might be a continued government shutdown and the unknowns associated of what a prolonged shutdown could do. It might be, whether any Trump, Cohen, all that stuff. Market's been pretty good about disregarding any of that, but of course, any kind of information with China, any setbacks on any trade deals, these are all things that could be the talking heads focus point on what causes the consolidation to come, and we'll have to be keeping an eye out for that. So oftentimes we see, charts signal something's happening, and then the narrative, the fundamental narrative, is applied almost after the fact to explain why something is happening on charts to the general public and the herd that, I can't just say to the general public on CNBC, well, the bounce lasted a month and it was extremely overextended and, the RSI level on the 4-hour time frame reached XYZ, and that's not going to make sense to the general public. So they say things like, well, we have the continued government shutdown and now the market's showing some weakness because of the uncertainties associated with blah, 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 blah. So that's usually how it happens in many instances. Obviously, sometimes the fundamentals are the catalyst that does lead to a shift, but there's many times where it's not. XLF on the daily time frame, raging bull from the bull break of 24.55. That was the go signal for the market to obviously see another leg up. 5 green days in a row every single day last week in earnings. That's earnings week for the financial sector, and obviously they responded as bullish as they could have hoped. Next resistance level, now that we're clearing a bunch of levels, is 27.01 and 27.47. The daily RSI is about to go from under 20 right back to 70 almost in a straight shot. The 4-hour RSI with extended hours turned on is up at 77 as well, up there with SPY, and the weekly time frame. So XLF, we're still just looking for a lower high compared to 27.47, and from where we stand, we would still need about 5% in order to get to that resistance level. So to think that we can see another 5% and then have the strength to break through resistance, again, we just have to look at what's the most likely scenario. And in my opinion, the most likely scenario is a lower high. Obviously, at this point, the last month of a bounce that we've seen has been very significant. And that I'm talking about for everything that we just looked at. So if we were to only see the first 2 weeks of the bounce and then we start to consolidate, that's a bit more worrisome for the bulls because we can very easily roll over and head to lower lows. But the amount of confidence that the bulls have gained from this last month of bounce pretty much ensures that we are going to see a weekly higher low form, and for it to be healthy consolidation, and for bulls to look at that opportunity, the bulls that have sat out this bounce and said, man, I really missed a big dip opportunity. When we do get that healthy consolidation, I will be looking for bulls to pounce on that opportunity and look for that higher low for an entry for those that missed. So VIX on the daily time frame continues to just struggle, unable to get any kind of follow through on any bounces. We did get 1 hourly trend change mixed in there, but there was no follow through from it. Dropped down, hitting lower lows down in the 17s now. And if we look at the weekly chart for VIX, we're heading down towards these key supports right around 1609 and 1594. And those are some solid bottom fishing levels. If we get closer to those levels, the risk to reward of using those as a bottom fishing play will be pretty good for the bulls. So I'm still keeping my eye on the volatility sector. I haven't played it in a really long time, and I may look to play TVIX or UVXY if we do get some clear shifts in momentum, which again, just has not been existent the last month. But the bulls are going to get lulled into a sense of complacency, and then we're going to see that pendulum swing back and we're going to consolidate. So keeping an eye out, staying nimble, staying cash, and staying patient, waiting for these signals. A lot of bears have gotten burned the last couple of weeks trying to time this top. But again, we don't need to nail the tops and the bottoms of these moves. We just need to get the meat in the middle of those moves. So you don't have to nail the top. We can pull back for a couple days, because the way that we're going to lose this daily uptrend, let's just use SPY as an example, but everybody's fairly similar. The last SPY clear little daily higher low that I'm going to be going off of is 256.41. So I know that the next time that we consolidate, we're still going to maintain a daily higher low. We're not going to just lose this daily uptrend on the first little consolidation we see. So we're likely to pull back and hold a higher low compared to that 256 level. And to change the trend and lose momentum for the bulls, we'll establish the higher low. The bulls are going to attempt to see continuation, and then we would fail, be unable to break resistance, and then lose the daily uptrend. So that's how the trend's going to change, in my opinion. So it's almost like, like I said, you don't need to nail the top, because that initial consolidation is probably going to see the bulls buy that dip, unless it's some kind of significant news event that causes a shift in sentiment. But at this point, we don't have anything that appears to be doing that. So patiently waiting. And again, the only reason that I am scaling into a smaller hedge position is as a hedge. So if you are not hedging a long-term portfolio, it would not be the same kind of strategy for entering any bearish position. So I appreciate you watching. I hope you're well this wonderful weekend. And the bulls have a lot of momentum as we head into this coming week, with a lack of resistance nearby until we get up to 269. and we'll see if the bulls are able to get through 269 and 271.22 resistance. The more we get extended on this 4-hour time frame, the more comfortable I am with my scaling into those short hedge positions. Not a financial advisor. Do your own due diligence and research. We'll see you soon.